Good morning, everyone. This is Daily Trading Analysis with the weekly recap for the worst week since 2020 COVID era. I'm here to show you real numbers, to show you facts. I will give you also some of my opinions, but my channel right now is going to focus on provide you details about these facts. It's crucial to understand what is happening right now. So the overall sentiment, it's very negative, driven by the escalating trade tensions and the uncertainty they bring. The big looming threat of tariffs, it's big right now. The market's been trying to digest the implications of potential trade wars that is sparked by new tariffs and the possibility of retaliatory measures from other countries. So basically, China countermeasure US with 39% of tariffs after the big debacle of the tariffs that Trump showed this week. And also, on top of that, we have the influence of these tariffs in the Federal Reserve's monetary policy decisions. Senior White House officials have indicated Trump plans other sectoral tariffs for semiconductors, pharmaceuticals, and potentially critical minerals. So what the Federal Reserve will do, we have some hints because Powell spoke yesterday in a conference and we have some light to bring. But first, we are going to review the economic data because it's not only about tariffs, it's also about how the economy is showing strength or weakness. We had US jobs openings basically going lower. It's lower than expected, but this will potentially impact economic growth. But the Federal Reserve basically wants the job market to be weakened a bit. So let's not focus on the job openings, let's focus on the manufacturing, employment, and inflation as per the services paid. So basically, manufacturing came in below 50 and it's continuing contracting. 49 for the PMI. We were expecting a little bit less than previously, the 50, but it's in contraction territory. Also, the employment 44.7. This is a huge decline, which suggests weakening labor market. So this is going in the direction of the Federal Reserve, but this is maybe going too low. 44.7, it's pretty low for the employment index. And then we have data of new orders showing decline on demand. New orders 45 coming from 48. It's also a big decline of weakening demand. In terms of inflation, we had services prices paid 60 coming from 62. That's lower, but I mean, it's still 60. This is higher than expected prices paid, which is inflationary. And then the manufacturing overall prices 69, almost 70. Whoa, this is a huge increase from the 62 to the 70. This is overall manufacturing prices paid, which shows a significant increase, potentially leading to Fed action. But we are going to review what Powell said. And basically, they are going to wait and see how things develop with tariffs. Then, something that I would like to highlight is Tesla deliveries in the first quarter, which showed really big decline. We were expecting 390,000 and we were 336. So it fell short of expectations, which in Tesla's market sector of consumer, this is negatively impacting and showing you potential demand issues on the consumer side of things. So all this is negative. We have a pretty low sentiment right now, but let me show you how things are going in terms of the expectations for rate cuts. We were expecting 1 or 2 rate cuts this year, but this week everything changed. This is the current year. This is where we are right now. We are expecting to see 1, 2, 3, and 4 rate cuts this year of 25 basis points. So basically a whole 100 basis points, a whole 1% of rate cuts. Why? Because the economy is dumping. Demand is dumping. Manufacturing is at its lowest level, and demand is at its lowest level since the COVID, since 5 years ago, and prices keep going up. So what is logical to expect is the Fed to take action, the Fed to start accommodating rates down to promote a little bit more demand and to alleviate these households that are dealing with all this, because you are paying higher prices and you are paying these tariffs. So what Powell said, it's basically several things. Powell said that tariffs are likely to raise inflation in coming quarters, and even more persistent effects are possible. So basically, the Fed, Powell indicated that the Fed is closely watching this tension, but the uncertainty is high and the downside risk are so high that they don't want to take any action. So they will wait and see how things develop. They will obviously take action if things go pretty wrong. But right now, where we are, these are market expectations. This is the Fed watch tools. This is based on bonds and certain markets movements. And this is priced in. But the Fed, Powell, didn't confirm these actions. So be careful with these expectations, because this week has crashed everything. But these are facts. Things are changing and being priced in. Now, let's start the technical analysis by let me show you the market in terms of sectors. So this is the 5-day, the 1 week of sector performance. As you can see, we have staples up here, defensive sector. We have utilities up here, defensive sector. And we have healthcare here, XLV, defensive sector. Even those defensive sectors came down pretty hard, -2%, -4%, and -6%. Let me try to move this a little bit. Okay. So staples -2, utilities -4, and healthcare -6. Everything changed this day, on Thursday. And things were pretty good. As you can see, we were with consumer discretionary going up. And that's the first thing you have to notice. XLY -7%, consumer discretionary, 2/3 of the economy plummeting 7%. XLK, technology, -11%, and energy being crashed -15% because lower demand. So this is the market right now. This is what has changed. We are in a situation in which everything is being pricing pretty heavily to the downside. Pretty big to the downside. So let's go even deeper. Let's see the let's see price action. Let's see charts. And as always, let me show you the market internals. As always, the left-hand side is the volume and the right-hand side is the advanced decliners. First, with the S&Ps, we started, well, pretty good, in good shape, a little bit going up here until the tariffs came out. And the first day, we got minus 700 million in volume. People, big investors, big players, institutions bailing out of their positions. And then on Friday, even higher. 1,000,000,123 of outflows. This is huge. I've never seen something like this before. In terms of advanced decliners, I would have to readjust the scale here because we were basically going higher until the tariffs came out. And this is big. We got 2,000 in decliners. This means that almost the entire market was going down. The entire market. In terms of Qs, we have the same situation and even harder. Let me adjust the scale here because the scale of the outflows are insane. Almost 600 million of outflows and 3,000, more than 3,000 of decliners in the Qs. This is insane. The scale of my charts are out of everything I've seen before. Now let's move into the NQ weekly chart. I've prepared here because you may know in the media that 10% is correction territory. In the Qs, we were in correction territory in 3 weeks. In 3 weeks since the start of February. Then 20% is bear market. We are right now entering bear market in 4 weeks. In another 4 weeks since the start of the correction, we've been plummeting. And this week, minus 10% in the NQ is one of the biggest in history. Look at this chart. Let's go back to this. To 2020, this is what happened in COVID, 25%. Look at the scale of this in comparison with this. Look at this. This is huge. We dropped in 1 week half of the COVID crisis, 10%. We went from 20,000 to 17,500. That's 2,600 points in 1 week. That's insane. Now let me tell you, we are in a big spot right now, right here. And this is the weekly chart, 200 moving average. I'm pretty sure that there will be people buying this dip. Because when people is scared is when you have to be willing to do certain things. That's from Warren Buffett. So we are in a technical spot in which I'm quite sure people are going to buy certain things. Now, this is my opinion. I'm not saying that you have to buy this, but I wouldn't be surprised if next week we try to bounce back because we sold so hard that we are supposed to bounce a bit. Let me already adjust the weekly because I think we might have some more downside, but this is also a huge area in terms of imbalance. All these imbalance, remember this is a weekly chart. This is pretty high time frame. If we go to the monthly, this is already a month of 20, in 3 months, 22%. The crisis after the inflation, when the rate hikes were going nuts, we got 32%. And this was the COVID, 26%. So as you can see, things are getting crazy in terms of volatility. This is a monthly chart. Things are going wild in terms of pullback, but at some points, people are going to add to their portfolios because, don't get me wrong, things are always correcting, and we have this series of big trend to the upside, which is happening since years ago. The market, the stock market, is built to go up, but this correction this week, it's been insane. So be really careful because as you can see, everything on my right hand side is red. Everything. The VIX is getting nuts. Look at this. This is a 100% increase in 1 week in the VIX. Look at this. This was February. This was the COVID. And we are right here, right now. So volatility, it's going crazy. Market is dumping really hard, and we have to be extremely careful of what we do. What we can do, this is a daily chart. Let me just clean this a bit because what I'm going to do right now, what I'm going to implement in my risk management is do not trade Mondays because people freaked out on Thursday and Friday, 10% in 2 days with a huge gap right here. We are going to see a correction, but I'm going to take the same action as the Fed. I'm going to wait and see. On Monday, I will wait and see. Certainly, if you have long-term portfolios, your 401k, this is a big spot for things that I mentioned earlier about the 200 moving average on the weekly chart. Previous resistance might be support right now. So I'm pretty sure that we are going to see some people buying this. But these are not retail. These are not you and me. These are big institutions which might average down on their big portfolios and big positions. This doesn't mean that things are going to change in the short term. We are just going to see how the market works. And the market, usually on technical spots, they add. Apart from that, my biggest recommendation is to just wait and see. Wait and see. Don't be so naive to think that the market can't go down even harder, because we were saying this here and we are 15% lower. So be really careful because these can destroy accounts. These can destroy entire lives. And we have to be extremely careful. If you have to learn something from this video and from this era of tariffs, is risk management. Because everyone can buy when things go up, but you have to learn to stop when things go south. And that's the main message in this video. I'm not going to try to perform some technical analysis because right now the market is being driven by sentiment. It's crazy. It's going nuts. People is just bailing out. Fear, VIX spiking, dollar dumping, yields dumping, even the 10-year, which is the heart of the US economy. So be smart and just wait and see. Wait and see. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, and put your ideas, your comments, and your risk management in the comments down below. Please, I would like to hear from you how you are handling this week and this situation. And as always, patience, discipline, risk management, this is what makes you be alive to survive these challenges. So let's rest a bit. During the weekend, it's been I think the most difficult week of the year and probably of my career apart from 2020. That was also pretty hard, but that was because of a reason, a global reason. Now, Trump policies, Trump tariffs are dumping, are beating the global economies. And that's another thing. So let's see how things develop, because other countries might not be, they might implement countermeasures, which is understandable. And we have to wait and see how they act, because this is going to impact our lives for years, even for decades. So be prepared, be smart, and have a nice weekend, and see you on Monday.